Can I start the session, sir?
Yeah, you can start, madam.
Good evening to the dignitaries, members, and students. Today, the 14th Sankar Aiyar Memorial Lecture will be delivered by Shri N.K. Singh, Chairman, 15th Finance Commission. Before commencing the proceedings, may I request all to raise for the ICA motto, please. Selva, motto, please.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैता 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 एतद्द्वैता
Dear all, thank you. May I now request Dr. T. Paramasivan, Joint Director, to formally invite and welcome through virtual mode Ms. Yamini Aiyar, President, Center for Policy Research and granddaughter of late V. Sankar Aiyar, to the program. Thank you, sir. Shri N.K. Singh, Chairman, 15th Finance Commission, joins in the elite club of erudite speakers of the earlier 13 memorial lectures to deliver today's V. Sankar Aiyar Memorial Lecture. We also have the gracious presence of Sri Manishankar Aiyar, former Union Minister and Member of Parliament, and the eldest son of Sri V. Sankar Aiyar and the creator of Memorial Fund. To formally invite and welcome them to the program, we have with us our beloved Chairman of SARC, C.A.K. Jalapati. I request our Chairman to formally invite and welcome the two dignitaries and to deliver his welcome address, please. To you, Chairman.
Yeah, thank you. Thank you, Madam. Most respected Chief Guest, Sri N.K. Singh, Chairman, 15th Finance Commission, the Guest of Honor, Sri Manishankar Aiyar, former Union Minister for Panchayat Raj and Development of Northeastern Region, Ms. Yamini Aiyar, family members of Sri Sankar Aiyar, partners of V. Sankar Aiyar, and this my colleagues in this great profession, team of SARC, Dr. Paramasivan, Joint Director, who has done excellent coordination with the family members of late Sankar Aiyar and the SARC of ICA for this great program. Madam Uma Suresh and other distinguished invitees participating from across the southern region. Very good evening to all of you. I feel greatly honored to be part of this 14th Sankar Aiyar Memorial Lecture, which is one of the prestigious program being conducted by SARC. I'm extremely happy that today's Memorial Lecture is to be delivered by our esteemed Chief Guest, Sri N.K. Singh, Chairman of 15th Finance Commission, who joins with the illustrious and elite luminaries who have delivered the earlier 13 Memorial Lectures since 2008. It is an occasion that I will cherish, having been given the pleasant and privileged role of offering the welcome address and for extending a warm and hearty welcome to our chief guest and other acclaimed personalities and other distinguished participants. On behalf of SCRC of ICI, I am beholden to perform this assignment of extending warm and hearty welcome to Shri N.K. Singh, Chairman of 15th Finance Commission, who has consented to deliver the 14th Sankar Aiyar Memorial Lecture. Our chief guest is, in spite of his busy commitments, has spared his precious time to be amongst us. We are very much feeling honored by your presence, sir. On behalf of SCRC of ICI and the family of Sankar Aiyar, I heartily extend our warm and hearty welcome to this excellent program. The year after year, our guest of honor, Shri Sankar Aiyar, the eldest son of late V. Sankar Aiyar, and also the creator of the fund through which we conduct every year this memorial lecture. He has been a source of encouragement and support in conducting these memorial lectures. We are delighted to have this percentage participation yet again to this memorial lectures to add value to the proceedings of this memorial lecture as before. In this great occasion, I deem it my great pleasure to extend our warm and cordial welcome to Shri Sankar Aiyar. I also take this opportunity to express our sincere thanks to Madam Yamini, the granddaughter of late Sankar Aiyar, for accepting our request to take part and address the elite gathering today. Madam, we are delighted to extend our warm and hearty welcome to you to this 14th Sankar Aiyar Memorial Lecture. This program is graced with the august presence of the family members of late Sri Sankar Aiyar and the partners of Sankar Aiyar Chartered Accountants firm and the host of persons known to our guest of honor, Shri Sankar Aiyar. I offer my warm welcome to all of them. This memorial lecture is part of annual event in the SCR since 2008. We have been witnessing a large participation of members in person in our earlier memorial lectures. But this time, due to this pandemic, the program is being held through virtual mode. Yet I could see the good number of members participating in this program from across the southern region. Unlike in the past, when this program held in Chennai and is attended by members, the students from Chennai, this time, due to this conduct of the program through virtual mode, this event is being witnessed by members and students across the southern region. On behalf of SCRCFIC, I offer my warm and cordial welcome to all the members and students for this great program. I also feel happy to welcome Dr. Paramasavan sir, the Joint Director, Madam Uma Suresh, and other officers from SCRC to this excellent program. SCRC is conducting this memorial lecture in the memory of and the recognition of contribution to the profession by late Sankar Aiyar, the founder of V. Sankar Aiyar Chartered Accountants firm, who left an indelible mark in our profession and to the country. Today's topic, chosen by our learned speaker, resetting center state finances, rethinking the third tier, speaks volumes of the importance our chief guest attached to the growth of our economy through prudent financial management by effective center state coordination and implementation of the financial resources. Our chief guest advocates the need to revisit the powers and functions of the center and the state, considering the changes in the technology and the priorities before us and keep the pace with today's environment. Sir, we are sure that your immense and impressive contribution as Chairman of Finance Commission and in the field of finance for decades with our scholarly and rich experience will be reflected in our insightful lecture today, giving the audience new perspective and enlightenment on the economic activity in the country and that is on the center state finances and taking forward to the third tier to boost the economic activity. We are here to listen. You are sharing the wealth of knowledge you possess amongst us today. Before I conclude, let me have the opportunity to extend our warm welcome on behalf of SCRCFIC and my own behalf, the 53rd Regional Conference of SCRC being held on 19th and 20th of November 20 this year at Hotel Remedies in Coimbatore, also through virtual mode to enable other members to part of this prestigious event of SCRC. This conference is very unique since the first time in the history of SARC, a regional conference being conducted both physical and virtual mode. SARC has been taking the sincere efforts to ensure that the feel of the participants in the person and those who watch the proceedings through virtual have the same visual clarity. The detailed information will conference about the conference will be sent to the members through various communication channels and emails. SARC would ensure that your participation would be fruitful and purposeful to provide an enlightening experience of knowledge accumulation. With this, I once again take this opportunity to extend to all of you our warm and cordial welcome to the 14th V. Sankar Aiyar Memorial Lecture. On this happy occasion, I join with my colleagues in this regional council to greet you all a very happy Deepavali. Thank you so much for this great opportunity.
Thank you, Chairman. That was good. SARC has been conducting the V. Sankar Aiyar Memorial Lecture since 2008 in honor and memory of the late C.A. Sankar Aiyar, doyen of the profession in the 40s and 50s. Leading luminaries from different walks of life have delivered memorial lectures in the past. To introduce today's speaker, Shri N.K. Singh, Chairman 15th Finance Commission, and to say about the memorial lecture, we have with us Ms. Yamini Aiyar. May I now request Madam to introduce the speaker and say a few words about the lecture, please.
Thank you very much. Chairman SIRC of ICAI, Dr. Paramasagan, our chief guest, Shri N.K. Singh ji, my father, I will refer to him as Appa. It's too odd for me to say Mr. Mani Shankar Aiyar, esteemed guests and members of the regional community of chartered accountants. It's an absolutely deep personal and professional privilege for me to have the opportunity to introduce Shri N.K. Singh ji and his lecture today. It's an honor because this lecture is in memory of my grandfather whom I never met, but he left a deep mark in my life, partly because of the many life stories that my father relished us with throughout our childhood and now continuing into our adulthood. And for all of you who've met my father, you would know that he wouldn't give up the opportunity of a really good story told in detail. So even though we never met my grandfather, we have seen his photographs and lived his life through the stories that my father has told us. My mother introduced us to the Ganesh Mandir, and as you walk into the Ganesh Mandir near the Hanuman Mandir in Connaught Place in Delhi, there is a photograph of my grandfather, and it was my mother who first told me about my grandfather and his contribution to the Mandir, which has over the years become one of the most critical anchors of our family and of me personally. It's where every crucial moment of my life has been spent seeking blessings of Ganeshji, but also of my grandfather. When it came to hoping against hope that I would pass my class 12 board exam despite not studying, hoping that I would make it into a good college, a good university, make my father and my grandfather proud. When it came to big life-changing moments, I got engaged in the temple. Priest from the temple conducted my marriage. My children have all spent marked moments of their life in that temple. So my grandfather has been very much part of my life. And funnily enough, he's also shaped my professional interests. I spent my entire adult life, continuing to today, running away from all of you chartered accountants. You do make our lives very difficult. But at the same time, I think it is his interest, his professional background and interest that found its way into my genes. So eventually, from wanting to work in the development sector, spending some time with nonprofits, I found myself developing a very deep interest in public finance and tracking expenditures. And when I came now almost 12 years ago to the Center for Policy Research, I set up an initiative called the Accountability Initiative, that did a citizens version of what accountants do, track public expenditure and explore whether or not money that is being deployed in the name of all of us, for which you all ensure that we pay our taxes, is used in ways that improve the betterment of our lives. So there is a lot of my grandfather, even in my professional life. This lecture series itself has come also to mean something very important to me at a very personal level, because last year, when we had this lecture, which my father was to conduct and introduce our speaker for, he had unfortunately, both he and my mother had been hit by COVID. And Shri N.K. Singh ji, you used to call me every day, twice a day, to find out how they were doing. When this lecture was supposed to happen, my father doesn't even remember, but he was in a very bad way and we were very nervous. But perhaps my grandfather, through the lecture, was looking over us somewhere from up there, blessing us, because literally as we signed off from the lecture that Shri Arvind Subramaniam ji gave, we got a call from the doctor saying he's taken a turn for the better, and lo and behold, a few weeks later, he was back home. So this is an honor to my grandfather. He's up there somewhere watching us, blessing us, and learning a lot from these lectures. On a professional level, I couldn't be more privileged to introduce Shri N.K. Singh ji to today's conversation. Shri N.K. Singh ji is a very well-known Indian economist. He's a bureaucrat, a politician, an academician, but more than anyone else, he has left a deep mark on India's public finances. As chairman of the Fiscal Responsibility and Budget Management Review Committee, as chairman of the 15th Finance Commission, his aspirations of a genuinely federal structure, a genuinely federal architecture for India's public finances is what has shaped the nature of our public finances and what will continue to shape the nature of our public finances going forward. Shri N.K. Singh ji took on the challenge of the 15th Finance Commission at what was a very, very crucial and complex time for the history of India's public finances, and particularly center-state relations. We had gone through with the 14th Finance Commission a period of 5 years of an attempt at deepening fiscal federalism by enhancing devolution to state governments. This was considered to be a very significant moment in reshaping center-state relations. But the one feature that has always dominated India's fiscal relations has been the nature of our political economy. And in that political economy, centralization has always it found its way of pulling back in this tug of war. And Shri N.K. Singh ji was in some ways, through the 15th Finance Commission, given the difficult task of assessing whether or not we should continue in the direction of deeper fiscal federalism, bringing state governments at the center of fulfilling their constitutional assigned responsibilities, or resetting the dynamic in a way that responded to this political economy and pull towards deeper centralization. For all of you, I would strongly recommend, as students of public finances in India, to read the 15th Finance Commission report in its entirety, from the first sentence to the last. It is a masterpiece, both in its assessment of the state of India's public finances, on the realities of the complexities and the political economy of center-state relations, but also a significantly wonderful art of diplomacy, which ensures that we continue in the direction of deepening fiscal federalism, whilst at the same time recognize the differing pulls and pressures that are creating a new churning in the shaping of center-state relations. It talks about the impact of GST. It talks about the shifts in institutional relationships with the Planning Commission and plan funds going away and the emergence of the Niti Aayog. It talks about the fact that as the Indian economy has got more complex, the current separation of roles and responsibilities have raised important questions about spillover effects and externalities. It asks questions about whether we need to relook at these dynamics. And I think in the course of our lecture today, Shri N.K. Singh ji is going to give us a tour de force on the challenges that confront center-state relations and the ways in which we need to navigate them for a better, more federal fiscal future. But most importantly, Shri N.K. Singh ji is deeply committed to the one aspect of our fiscal federal architecture that tends to be most deeply ignored. It has, in my father, one of the few last remaining champions, passionate champions of local governments, and of course, perhaps because of dining table conversations, and because I'm a really good student who has been schooled well by Shri N.K. Singh, I too am a passionate advocate for the third tier. And there are many, many important questions around it. What is the role of the central government, of the union government, I should correct myself, in shaping the dynamics of local governments when local governance is a state subject? How does one think about empowering, fiscally empowering local governments when state governments have followed in Raja Chalaya's infamous characterization, everybody loves decentralization, but only to their level? How do we imagine a decentralized architecture, one that empowers the third tier, when state finance commissions are non-functional and weak? How do we create an ecosystem of collaboration across center, state, and local governments when our taxation system is moving in a more centralized, but cooperatively centralized through the GST mechanism, but local governments have been kept out? What does it mean to strengthen the third tier when local governments do not have effective taxation powers? And for the few taxation powers they do have, they are often reluctant to use them. So these are some of the questions that we battled about, we grappled with, we debated and discussed even as the 15th Finance Commission was in the thick of their deliberations. I think that the 15th Finance Commission stayed true to the importance, to recognizing the value, importance, and centrality of local governance of the third tier. I worry that in some of its recommendations, it has been almost too prescriptive, holding local governments to account on various conditionalities, which may render them more as implementing agents of the central government, and in some inadvertent way potentially further disempower them, even though they may be fiscally strengthened by virtue of the recommendations of the 15th Finance Commission. But these are issues that Shri N.K. Singh and I have been debating for some time now, and as a good student, I have learned that I must question and critique, but inevitably he teaches me something new that makes me think again about my arguments. So really looking forward to learning from your lecture, and thank you very much on behalf of my entire family for both being such a wonderful teacher to me personally and for being here today to talk to us. Over to you.
Thank you, madam. It was indeed a very good expression on this topic. Today's topic of lecture, Resetting Center-State Finances, Rethinking the Third Tier, is a pertinent and contemporary topic of interest. It is, therefore, most fitting and appropriate that a leading personality in the field of finance and now leading the 15th Finance Commission is delivering the 14th Sankar Aiyar Memorial Lecture on this topic and give the audience an insightful perspective of the present financial structure, its growth, sharing of finances between center and states, and effective utilization of funds. On behalf of all present, may I request our chief guest, Shri N.K. Singh, G, Chairman, 15th Finance Commission, to deliver the memorial lecture, please. Over to you, sir.
Thank you very much. At the outset, I am profoundly grateful to the SIRC, their organization, their consistency, and personally to Mr. K. Jalapati, the chairman of the SIRC, for this privilege and opportunity to be here with you today and to have this honor of delivering this lecture. I'm indeed privileged to deliver this 14th V. Sankar Aiyar Memorial Lecture, which has been held almost without fail. This is to recall and celebrate the life and achievements of late Vaidyanath Sankar Aiyar. His story is a fascinating one. of one of overcoming many handicaps, coming from a small town in Tamil Nadu to set up a remarkable accountancy firm in Lahore. More importantly, to make a flourishing enterprise of it. His tragic accidental demise cut short on what would have been undoubtedly a greater contribution in the specialized field of accountancy, finance in post-independence India. He left us suddenly, but not without having imparted the highest quality of education to his children, with which you are all familiar with, and others seeking to emulate, hopefully, his example in recognizing that given the infirmities and uncertainties of life, the legacy created through investment in our next generation outlasts our mortal life. I first met money's revered mother, Bhagya Lakshmi Sankar Aiyar, who was an elegant lady with an attractive umbrella, came to secure the admission of both Mani and Swaminathan Iyer at St. Stephen's College. Thereafter, I have known both of them, and our endearing affection has only become stronger with time. With Mani particularly, our career paths have crisscrossed each other. Both of us worked for a while in the area of international trade policy, he from the Ministry of External Affairs, I from the Ministry of Commerce. On a lighter vein, Mani, with his characteristic humor, once told me that both of us prepare briefs for our senior officers. But alas, while he stayed in Delhi, I invariably traveled to New York. Thereafter, he was an important advisor to late Prime Minister Rajiv Gandhi, and we had many fascinating discussions about Bihar's developmental initiatives. Our paths would cross again when we were in Parliament together and participated in several debates and committee deliberations. Mani's oratorical skills, his flair, his sharp sense of humor and repartee, not always to his advantage, always made his speech an occasion to seek and remember. My relationship with Mani's younger brother, Swaminathan Iyer, has been equally endearing. Having known him over decades, no one will question that he is among the most coveted economic writers whose style, content, and analysis has the hallmark of clarity and devastating simplicity. He's never doubted that in writing on themes and subjects which are nascent and maybe innovative, equally coming to conclusions which are different than conventional wisdom. I'm sure that I always make sure, and many of you would do, not to miss any of his columns, which are both enlightening and certainly enjoyable, either in the Times of India or in the Economic Times. And now come to the theme of today's lecture. You have mentioned about me talking on the broader theme of center-state relationship. I've talked about the theme of center-state relationship, what needs to be done to fortify them, to enhance their credibility. But today, I'm going to talk about one aspect of center-state relationship, which, as Yamini very correctly pointed out, has been somewhat neglected. I have therefore chosen the broad theme, with a third tier, rekindling trust. This is a subject close to Mani's heart. We all know the key role which he played in bringing public focus on this neglected issue, and thereafter in crafting and ensuring the passage of the 73rd and 74th constitutional amendments. Notwithstanding several infirmities in the drafting of these amendments, they indeed were important landmarks in giving a policy framework and architecture to the third tier. I'm also happy that today's event is being anchored and presided by Yamini, a very, very talented granddaughter of the person in whose memory today's lecture is being held. Yamini knows that she inspired credibility and confidence in a very short time in the thinking circles of India. Indeed, her grandparents would have been very proud and so also as not only Mani's wife, but many of Mani's close friends, a close circle of which I count myself a privileged member. I've selected this subject for several other reasons. First and foremost, it was an important theme of the deliberations of the 15th Finance Commission, an aspect on which Yamini has touched. I have the privilege to chair this, and I'm happy to share that we visited all the 28 states in India since J&K had become a union territory. Our visits also included Ladakh as a union territory, being the first Finance Commission to ever go there. We had ensured that as part of the structured program of our state visits, interactions with the third tier, the urban local bodies, with representatives of the Panchayat Raj institutions was an integral part of our visits. In many ways, they were the more fascinating part than the structured dialogue with state governments, which treaded familiar grounds. We also ensured that as far as possible, no representative of the state government was present in our interactions with them. These representatives, elected and empowered as they were, could freely express their views before us. Indeed, quality of some of these representatives, particularly the women from the Northeast and the hill states, suggested sound ground level understanding and invariably rich in content. It was the most important highlight of the Finance Commission's visits. Many of the things on which I might comment today are based on our personal experience gained from these interactions with the representatives of the third tier. A substantial part of these have been reflected in the deliberations and in the recommendations of the 15th Finance Commission, happily and fully accepted by government. Second, I do believe that the infirmities which have crept up in the working of the third tier, suggested by the title, is in more ways than one does not augur well for governance at the grassroots level. We know that the third tier of government, which is closest to direct democracy in any country, echoed by the fabled Abraham Lincoln's address in Gettysburg, which he described democracy in multiple ways. Many indeed draw comparisons to the nascent independent republics which existed in India, where people were the real rulers of those nascent republics. However, beyond small city-states with a few thousand people, its relevance in large countries was not immediately obvious. While we accepted in India after independence was not direct democracy, but a model of democracy for the country as well as its constituents called the state. In the resulting model, people elected representatives to make laws and executives enforced the laws. Mahatma Gandhi's views about self-sufficient and self-governing village panchayats as a method of going back to direct democracy continues to echo in our hearts. The illustrious founding fathers of the Constitution had enshrined village panchayats in Article 40 under the directive principles of state policy. It did cast an obligation upon states to take credible steps to organize village panchayats and endow them with such powers and authority as may be necessary to enable them to function as units of self-government. We know, nonetheless, a meaningful implementation of this vision of our democracy had to wait for 29 years, a wait in which Mr. Sankar Aiyar played an exceedingly critical and a catalytic role. The conceptualization of the local self-government system in post-independence did emanate in 4 reports, which we are all familiar with. The Balwant Rai Mehta report on Panchayati Raj in 1957, the Ashok Mehta report in 77-78, the G.V.K. Rao report on administrative arrangements for rural development in 1985, the L.M. Singhvi report of 1986. But it was not until 1992, with the enactment of the 73rd and 74th Amendment to the Constitution, that these institutions were formalized in our governance architecture. Subsidiarity is a virtuous principle, and subsidiarity is the basic principle of organizing a federation that believes that economic, social, and political issues should be dealt with at the most proximate level that is consistent with their most efficient resolution. Thus, for example, subsidiarity is a general principle of devolution to different layers of government in all European unions. The functions are best carried out closest to citizens at the smallest unit of governance possible and delegated upwards when the local entities cannot perform the task efficiently. The recognition of panchayats as institutions of self-government also broadened the role of finance commissions through the insertion of subclause BB and subclause C to clause 3 of Article 280 of the Constitution. Article 283 BB refers to the measures needed to augment the consolidated fund of a state to supplement the resources of the panchayats in the state on the basis of the recommendations of the Finance Commission of the state. Since then, approximately 3 million representatives are regularly elected to 2.6 rural local bodies all over the country. Providing basic services at the grassroots level makes them the primary interface, or supposed to make them the primary interface between citizens and government. The Constitutional Amendment Bill assigned functions, finances, and responsibilities for a viable function of the Panchayat Raj institutions. They ensured certainty, continuity, and predictability. The 11th schedule was added to delineate 29 functions entrusted to panchayats, and the 12th schedule was added to delineate 18 functions entrusted to the municipalities. There was also the question of resources of entry 5 of the state list in the 7th schedule of the Constitution, which entrusts the responsibilities to Panchayat Raj institutions, and I quote, local government, that is to say the constitutional powers of municipal corporations, improvement trusts, district boards, mining settlement authorities, and other local authorities for the purposes of local government or a village administration, unquote. The states are obligated to devolve the 3 well-known functions, funds, functionaries, and functions to the panchayats, based on the recommendations of the State Finance Commission. The Ministry of Panchayati Raj at the union level is expected to play a supplementary role in the overall scheme of things. The Panchayat Raj institutions are also important agents for some of the flagships program of the union government itself, and there are numerous examples. The 15th Finance Commission made a significant quantum change by recommending a very hefty 4,36,000 crores to the local bodies for the period of our award, which is 21 to 26, an increase of 52% over the corresponding grant of 2,87,000 crore or the 14th Finance Commission, to which Yamini had referred to her in the introductory remarks. After careful consideration, we in the 15th Finance Commission concluded that these bodies required substantially enhanced resources. The tax revenues or the resource mobilization of these institutions for the overall budgetary requirements had remained grossly inadequate. Furthermore, given the pandemic, in the aforesaid grant, we had recommended 70,000 crores for plugging critical gaps in the primary health care. Yamini referred to the fact of conditional devolution, and here was 70,000 crores which went to primary health sector. Another 8,000 crores went for some incubation of new cities, and we also did combining a much higher devolution to the third tier, combined it with also conditions. There was also some incremental change between the urban and local segment, which reflected India's ongoing rapid urbanization. The 15th Finance Commission great dilemma was what I call the substitution effect. This has not been adequately publicly debated. Namely, that we as Finance Commission, if we continue to provide all the resources to the state government, which we know we have, the state governments can decide to spend the money which they would have otherwise given to the third tier in other ways to meet their revenue expenses. how does one ensure that the devolution from the 15th Finance Commission is supplemental and results in additionalities, not substitution? This is an issue on which we need further analysis. As we go forward, what are some of the key challenges now which cover the third tier? I'll mention a few dominant challenges. First, how to make each state government adhere and act in accordance with the constitutional provisions embedded in Article 243(1) bracket 1 reads as follows: the governor of a state shall, as soon as may be within 1 year of the commencement of the Constitution's 73rd Amendment of 1992, and thereafter, at the expiration of every 5th year, constitute a finance commission to review the financial position of the panchayats and make recommendations to the governor. As you would have perhaps noticed, these exactly mirror those pertaining to the Central Finance Commission. The Central Finance Commission has been constituted with alacrity, with firm timelines, given the pressures of the state and the anxiety on the part of the union to find out how much resources they would be left with for their own planning and decision-making over a normal cycle of a 5-year period of award. This is exactly what the state finance commissions were expected to mirror. Furthermore, the constitution of the State Finance Commission is obligatory under Article 243(1) and 243(y), explained earlier. In practice, however, while the constitution of the 6th State Finance Commission was expected by 2019-20, only 4 states have done so. Strangely, the states are Assam, Bihar, Punjab, and Rajasthan. States are still languishing, many of them, in the 3rd and the 2nd State Finance Commission. Take, for example, the example of Haryana, Himachal, Kerala, Madhya Pradesh, Maharashtra, Orissa, Sikkim, Tripura, Uttarakhand, and Uttar Pradesh languishing with 5th Finance Commission. Andhra, Karnataka, West Bengal, 4th Finance Commission. Chhattisgarh, Goa, Gujarat, Manipur, 3rd Finance Commission. Erstwhile Jammu and Kashmir and Telangana, 1st State Finance Commission. This is an area where I believe that the only injured or the adversely affected parties, so to say, are the 3rd tier of the government itself. Undoubtedly, given their somewhat weak financial position and their limited political clout, they have never felt empowered enough to seek and enforce this constitutional obligation. Nonetheless, looking back, I think this is a dereliction which must be purposefully resolved. Beyond the 3rd tier, indeed, it affects the rubric of overall governance. This is a subject which certainly deserves attention to ensure the fullest compliance of these constitutional provisions and obligations in letter and spirit. Additionally, as part of the process of empowering the State Finance Commission, one of the conditions is to ensure that the devolution of functions as prescribed in the 11th schedule of the 73rd Constitution is also fully complied with. Imagine for a moment that the Central Finance Commission, constituted under Article 280, had been derelict in not being able to give its recommendations in time. I'm almost certain they would have litigations in the echelons of higher judiciary to ensure a compliance of the constitutional obligations. I wonder, therefore, why similar recourse has not been taken in respect of ensuring that the governors are in full compliance of this constitutional obligation, and why this provision has not so far been tested in any court of law. Adherence to the constitutional provision is the inescapable responsibility of both the center and the states. The implications of this failure to constitute a deep malaise in the working of the 3rd tier of governance. I believe that a public interest litigation to either the concerned High Court or the Supreme Court can be one possible rational recourse by any affected party. Second, while these adverse consequences result in the resources of the third tier remaining scanty, they remain hopelessly dependent on successive finance commission, even after the 73rd and 74th constitutional amendment. Finance commissions, we know, central finance commissions, I mean, are not obligated to make any financial awards. All that the Constitution enjoins upon the Central Finance Commission is to ensure that the consolidated fund of the state is augmented to meet the obligations of the third tier. The last 4 finance commissions have given awards, have done so in the belief that these transitional support mechanisms cannot be and will not be a permanent feature. As far as we are concerned, and I have no hesitation on sharing this, we did toy with the idea, and Yamini knows the many discussions which I've had with her informally, that we did toy with the idea of abstaining from making any awards and seeking the implementation of provisions in relation to the State Finance Commissions. We came to the conclusion that if we had done so, the finances of the third tier would have been in a state of disarray. We were also prompted by the fact that a substantial part of their own resources had been subsumed under the constitutional amendments leading to an all-embracing goods and services tax, the GST. If we were to abstain from making financial awards, it would make the working of the third tier totally unviable. Institutional structure would have rapidly withered. We did not want this to happen, and not only did we therefore make the award, we gave a hefty increase in the award of over 40% over the last finance commission. On our part, recognizing this serious infirmity, we did make this a part of a stipulated criteria, a conditional criteria to which Yamini referred to. We have recommended, and I quote from our recommendation, we recommend that all states which have not done so must constitute the State Finance Commission, act upon their recommendations, and lay the explanatory memorandum as to the action taken thereon before the state legislature on or before March 2024. After March 2024, no grants will be released to a state that has not complied with the constitutional provision in respect of the State Finance Commission of these conditions. The Ministry of Panchayati Raj will certify the compliance of all constitutional provisions by the state in respect before the release of their share of grants for the period 24-25 and 25-26. This is a balanced one, enabling state governments some time to make the necessary preparatory work to undertake and fulfill this responsibility. This stipulation, which is a financial consequence, can be reinforced by the other appropriate method, namely appropriate action by higher judicial authorities. The third broad issue on which I wish to talk about is the financial viability of the third tier. Even though the transfer to the third tier from the center and the states have generally increased over time, their own expenditure has crept up while revenues have remained stagnant at around 1% of GDP for over a decade. Even prior to the implementation of the GST, which subsumed many of these taxes of the third tier, their own resources constituted 0.3% of GDP in 2010-11 to just about 0.25 in 2017-18, decreasing over time. Many of their own sources of revenue, like taxes on advertisement, entertainment, agricultural produce, binding registration fee, common property resources, to name a few, were subsumed under the GST in 2017. So in my view, looking at this, there are 3 logical steps to be taken. One, since what has been subsumed in the GST cannot now be unsubsumed, so to say, and since the GST was implemented through the voluntary consent of all state governments, there should be a compensating mechanism. Some state governments have enacted separate laws such as Kerala, Maharashtra, and Bihar. Other states should consider and set up these necessary institutional mechanisms to compensate the local bodies in lieu of the revenues foregone and subsumed by the GST. This is an area where I believe more empirical work needs to be done, and Yamini's organization, which has taken some innovative steps, will be well advised to consider the nature and framework of such a compensating mechanism. It would not be illogical that since the state GST subsumes all these taxes of the third tier, a certain fixed fraction of the GST, either as a percentage or in fixed terms, should be earmarked out of the state GST for being devolved to the third tier and through a compensation mechanism which would be fair and reasonable. This would be only equitable that while these taxes were subsumed, no mechanisms were worked out. Unfortunately, and this is something I must compliment Yamini, she brought it to my notice, that unfortunately the debates in Parliament in respect to the third tier did not throw any light or did not deliberate this issue of compensating mechanism for taxes subsumed under the GST. More importantly is the area of additional revenue as we go forward beyond the taxes subsumed. This relates to the entire issue of property tax. Property tax are taxes which are an important source for the third tier all over the world. While compared to the OECD countries, India performs very poorly in terms of generating revenues from urban immovable property. The data shows that while the average collection from property taxes in the OECD country is about 1.1% of national GDP, the number for India is, alas, 0.2% of GDP, just about 1/6. For some OECD countries such as Canada, United Kingdom, USA, property taxes, in fact, are the bedrock or revenues for the urban local bodies and the third tier. Several factors lead to the low property tax in India, which we know: undervaluation, incomplete registers, policy inadequacy, tardy administration. Another big challenge is the lack of accurate property tax records in the ambit of the jurisdiction of the third tier. In our report, we have made property tax an entry-level condition, in addition for access to the funds of the urban local bodies, giving a one-year window to state governments to notify the floor rate of property tax, to trigger, therefore, in 2 stages thereafter from 22-23. A state government notifying minimum levels of property tax, now a necessary condition, must also indicate that property tax growth will be linked in some way or the other with the state's own gross domestic product over a 5-year period. This experience so far of property tax in India is really a mixed story. Political hesitation, recalcitrance on the part of state governments is evident in all deliberations which we had with the state governments. Hopefully, with the recommendations of the 15th Finance Commission, now fully accepted, property taxes and their indexation to the GSDP will become an important source of revenue in the years ahead. The fourth issue concerns an issue which many would be familiar with, and Yamini even more, is the issue of professional tax. The power of the state legislature is derived from Article 276 of the Constitution. Entry 16 of the List 2 of the 7th Schedule currently prescribes, strangely, a taxation limit of only rupees 2,500 imposed by the 60th Constitutional Amendment. At present, 21 states are imposing the tax. It is curious that the recommendation of the 14th Finance Commission to raise it to 12,000 per annum has not found any tangible action. That commission had also recommended that Article 276(2) of the Constitution be amended to increase the limit and press the powers to impose the limits on Parliament, with the caveat that it should adhere to the Finance Commission's recommendation. The reason apparently for giving Parliament this power to determine the limits of professional tax is that the state governments, if they raise it, it could really have a deflective influence on income tax realization in the name of professional tax. The substitution and diversion and consequences for the direct tax realization has inhibited the central government in acting on the recommendations of the 14th Finance Commission. However, we in the 15th Finance Commission have reiterated this suggestion and have sought to revise the ceiling, to index it to accumulated inflation over a period of time, and have really worked out what it would be. By this method, the upper ceiling would turn out to be rupees 18,000, not 2,500, based on the 2020 prices, allowing the collection of professional taxes to urban local bodies in India would be also an important source, and indexation would ensure a continuing source of revenue over a period of time. This is an area where I believe expeditious action to act on our recommendations would greatly buttress the finance of the urban local bodies. The fifth key challenge is the issue of electoral politics of the third tier. Unfortunately, the electoral process has got deeply warped with excessive politicization of elections to the third tier. Whereas it has resulted in much greater empowerment, particularly women's reservation, it has also had some adverse consequences. Elections to the third tier should be based on local perceptions in selecting representatives who are best designed to meet the needs of the beneficiaries. It has become a needless pointer on whether in any way these local elections represent a swing in the mandate of the ruling state government, and strangely even as straws in the wind for the popularity of the central government. Excessive politicization of the elections of the third tier, which have taken place, detracts from its broad objectives, which was intended to benefit the beneficiaries. Sixth, and connected with this is the broader issue of accountability by way of audit reports and performance criteria. Accountability of public funds, and this is something which would be close to the organizers who are having today's event, and I'm grateful to them. Accountability of public funds is at the heart of sound public finance. Not enough progress has been made in this area. In the 21st century, with a robust IT industry, technical proficiency, there is no reason why the accounts of every Panchayat Raj institutions on a common classification scheme should not be available on the web for people to see and evaluate after the financial year closes. Even audit of such accounts and duly audited account statements should be made available only with a few months lag. The 15th Finance Commission, in its report of 2021, had pointed out the timely availability of audited accounts separately at the local level, jointly of the state and the all India level as a critical reform agenda. It has recommended that upgraded Priya Soft needs to be integrated with integrated financial management information system of the state governments and the public financial management system of the Controller General of Accounts in order to generate online accounts of each rural local body, enabling online auditing of such accounts and their consolidation at the state level. We have sought to address this suitably by making this into an entry-level condition and auditing of accounts, which we have mentioned in our report. Over a period of time, the digital penetration and connectivity in rural areas will greatly enhance and reduce the rural-urban information gap and enable the administration at the local level to function in an effective way. Under the BharatNet project, 128,870 village panchayats were already connected by fiber optical broadband connectivity and Wi-Fi by June 2020. We expect that although these timelines have shifted, the assured connectivity of all village panchayats, for which there is no dearth of resources, will greatly enable many of these objectives to be fulfilled. I believe that its completion before the 75th year of our independence will enable digital connectivity to harness the new frontiers of technology to the advantage of the third-tier institutions. The issue of performance criteria, which was referred to by Yamini, and financial resources linked to either inputs or outcomes is a debatable one. After considering all points of view, the 15th Finance Commission did adopt an approach, which is a hybrid approach, not surprisingly, that incentives should be outcome-based transfers Outcome-based indicators should be fixed against each cash incentive using the use of credible, verifiable data with the end objective being met, which is consistent, actionable, simple. Incentives must be sufficient to reduce and induce the desired outcomes, and incentives should be a reward or a combination of both achievements in terms of absolute amounts as a percentage of changes in the recent years to balance the efforts of advanced and laggard states. There is a point of view that binding characteristics of the performance criteria very often fail to achieve the desired objective. Untied resources enable the third tier to exercise flexibility to meet current and emerging challenges. Monitored can lead to systemic misuses. We have adopted a mixed and a hybrid approach in which, whereas a very substantial part of the resources still remain untied, others have been linked with benchmarks which mirror the national objectives. A substantial part of this, given the present pandemic, is earmarked to improvement in the health infrastructure and beyond that. Looking at the final issue, the issue of functions, undoubtedly, the delegation of these functions have been demarcated in the 11th schedule. I have already mentioned that I hope that the state finance commissions will ensure their fullest compliance. The last issue which I want to touch on is the issue of capacity building. There is need to resolve the problem of inadequate number and quality of functionaries at the cutting edge for enabling Panchayat Raj institutions to perform their functions efficiently. The existing functionaries are very few, mostly part-time, drawn largely from state bureaucracy. While some challenges regarding functionaries are genuine, others represent a lack of will. The difficulties posed by the small size and the large number of PRIs can be circumvented by a rationalization of this number and the use of smart technology and off-site common resources. We recognize that during our visits, without adequacy of human resource capital, it would be difficult for the third tier to enforce and employ contractual or permanent engineers, planners, talents necessary for discharging their obligations. Till such time, as some of the suggestions which I have outlined in my earlier comments are fully carried out, we expect the state governments to provide the requisite personnel support for enabling capacity building in the multiplicity of functions inherent in the scheme of things. In conclusion, let me summarize the suggestions which I have made in respect to the third tier. A lot of these are embedded in the implementation of the letter and spirit of the constitutional amendments themselves. They also pertain to the recommendations on finances, functions, and functionaries. Summarizing them, I would say, first, in terms of architecture, the implementation of the constitutional provisions of Article 243(1) relating to state finance commissions must be implemented, sequenced within the framework contained in our recommendations. Second, in improving the scanty finances of the third tier, necessary amendments be made by the GST Council or by another constitutional amendment which will enable a uniform compensating mechanism to ensure that a fixed percentage of the state GST is made available to the third tier. Third, to supplement their resources by indexation of the property taxes to the GSTP. Fourth, a constitutional amendment which seeks to introduce the application of professional laws as an important untapped source of revenue. Fifth, to obviate excessive politicization of elections. Sixth, accountability to audit reports and adherence to the performance criteria, fullest compliance by use of the IT and the integration of PRIASoft with integrated financial management systems in order to generate online accounts. Seventh, on capacity building, we need not wait for the enhancement of the resources, but we expect the state finance commissions to ensure that the state governments fully adhere to their obligations and that the necessary human resource capital and personnel from the state bureaucracy is made available. Last but not the least, the fullest integration of all panchayats by harnessing digital technology, which will greatly improve a much faster integration of the third tier economy to the national mainstream. as technology advances, moving to a new internet era. With the use of the Internet of Things and artificial intelligence, the demarcation of outcomes and responsibilities will get imperceptibly fused in multiple ways. These will open possibilities of withering, not withering, but flowering and blooming of the great potential which the third tier holds for the future of India. I look forward to the future with optimism and hope. Continuing surveillance, awareness, and our efforts will enable the realization of our quest to unlock the potential which the third tier embeds in multiple ways. Continuous effort, not the strength or intelligence alone, is the key to unlocking their untapped potential. Thank you very much for this opportunity of being able to share some thoughts on the third tier.
Thank you, sir. It is a fascinating session that you took us through, giving the nuances of diverse financial aspects, how it impacts the economy, the rationale of sharing of finances between center and states, and the issues involving your intuitive and interesting address. Thank you, sir, for your incisive thought sharing. Dear participants, please join your hands to appreciate and applaud in acknowledgement of our expression of happiness of having heard a wonderful speech and spent a very useful evening hearing him. Thank you, sir. I thank you once again. Thank you, participants. Before I request Thiru Manishankarji to go to the next session, we will be having some question answer session. So I think something is been popped up here. I request members, in case you have any queries, please come on to the chat box. So we'll start with the first question, sir. Are there any measures being suggested for fixing revenue leakage? Sir, to you, sir.
It says revenue leakage in the
Yes.
third tier. I have outlined some of the stringent mechanisms, particularly the auditing of the accounts and accountability, uploading it on the website, which will greatly enhance their accountability and minimize the possibilities of leakages. In addition, of course, to the fact that they will have to get their accounts audited through recognized mechanisms, which you all know.
So to the next question, what are the remedies to tide over the present financial crisis of the nation?
So the present financial crisis must be understood. There is no financial crisis of the first and most important thing which India faces. In fact, whereas growth rates are beginning to pick up, we have achieved and experiencing macroeconomic stability. Our problems really is to enhance this growth rate very significantly. One of the factors which will contribute to this higher growth rate is enhancing the revenues available to the country as a whole for enhanced public outlays. I do believe that particularly during the pandemic and extraordinary times, enhanced public outlays must be financed in a manner consistent with macroeconomic stability. And I do believe that at least 5 percentage points of GDP can be an additional revenue, even by the application of the current rate of taxes, which will greatly enable much higher levels of public outlay, both by the central and the state government.
So is there anything that can be done through finance commissions to fix a limit on revenue generation from taxes on alcohol, liquor by states?
Well, many state governments have followed a very varied policy on alcohol and liquor. In my own state of Bihar, there is total prohibition. So there is no question of realization of the resources from alcohol, because state policies have varied greatly. In fact, when we visited the state of Bihar, one of the states, we asked the question of whether a lot of revenues are being lost on account of the fact that international experience suggests that a policy of prohibition has more failed than worked. But I think that is something which is part of the state policy recommendations, and it is left to them of how they wish to enhance or moderate their alcohol and excise policy.
Sir, do you think that making states provide education free of cost to all till 10+2 while making provision of education in private institution exorbitantly costly, making it affordable to only top 5% of the population which are rich?
Well, currently, I think that we all know that we have a Right to Education Act, in which free access has been guaranteed. So whereas access has been guaranteed, the problem area has been that it has no relationship with expected outcomes. So how to improve the outcomes from the education is a daunting challenge. The new education policy has outlined some very important measures. We will need to enhance substantially our investment in human capital, which is health and education, to be able to expect the desired outcomes. But I expect that over a period of time, use of technology, much higher levels of public outlays, and much higher levels of skill inculcation, adaptability and malleability of skills, and a pedagogy better suited to an era where technology will be an important force, will improve education outcomes substantially.
So the next query is, why can't the government implement a common accounting and software for use by all the entities? As a citizen, I find issues when I go to the municipal office. Their systems aren't working most of the time. I do.
Well, this is a subject on which I have spoken in my talk. This is a subject to which we attach great importance to, the commonality of the platform, and I hope that the implementation of our recommendations will bring about a qualitative change, since we have made this a performance criteria for access to the awards which we have made for the third-tier institutions.
The next question is, will quarterly reporting of revenue and expenditure by all the government bodies help in better management?
Well, we have commented, I have commented on the expenditure and revenue of the third tier. In respect of other governmental entities, certainly I think that we need to improve the reporting standards by state governments and the central government, and to ensure that the leads and lags are minimized by the accounting entities in the process.
So the next question, you compared OECD countries as a measure of reporting the share of revenue by LLG. Which of the OECD economy is close to nature of Indian setup?
Very few, because I think that to some extent the comparison, although I made for the purposes of buttressing my recommendations on the property tax, the fact remains that per capita incomes vary dramatically. The political recalcitrance on property tax, which we found in all the state governments, is significantly higher than the entities and subnational entities of many of the OECD countries. But what we have given are benchmarks. We have given some model property tax acts in our Finance Commission's recommendation. We have also mentioned about some states which have taken more credible steps than other states, and we believe that this is an area where much more work is expected by the Ministry of Urban Development, the Ministry of Panchayati Raj. And this is an area where enhanced revenues and resources could make a big difference in the overall availability of finances, both for the state and for the central government.
Thank you, audience and dignitaries. Sir, you have enlightened the queries raised by the members. Thank you very much, sir, for enlightening us. uh, our guest of honor, Thiru Sankar Aiyar ji, has been a source of motivation and strength all through the conduct of this and the earlier memorial lecture. He had participated in all the memorial lectures and we have his presence of offer his thoughts in the memorial lecture, the association he is having with SIRC in conduct of the memorial lecture in the form of concluding remarks. May I request Thiru Manishankar ji to address the gathering, please?
Thank you very much, Mr. Chairman, and others who are listening in on this webinar. It is conventional to congratulate the lecturer on his lecture, but I have to give two sets of congratulations. One for the lecture, which was one of the most brilliant, most comprehensive, and most thought-provoking of any lecture on the subject that I've heard. And secondly, for the work that has gone into the 15th Commission and 15th Finance Commission's consideration of these issues, which when I was deeply involved with these issues, were regarded as somewhat marginal to the concerns of the Finance Commission concerned. I think we'll have to thank Shri N.K. Singh for having brought these issues center stage and made it part and parcel of the resetting of center state financial relations. You don't have a governance system anymore that comprises only the center and the states. The third tier of governance has to take its due place, and I'm really astonished as somebody who has been involved with this subject for the past 35 years to see the extent to which the chairman of the 15th Finance Commission, Shri Nankishore Singh, has mastered the subject. And I'm very proud that his mastery is partly because in this regard, his Shagird has become his guru. I'm sure Yamini had a great deal to do with setting you on the right path.
Absolutely.
And you have been on the right path. I want to particularly highlight your having increased the grant given to the third tier by as much as 52%. I also agree with many of the suggestions, or I would say almost all of the suggestions that you made, the 10 or 11 points that you summed up at the end, which need to be acted upon. I should add that although Yamini is right in saying that the question of local body finances being affected by the GST was not discussed in Parliament, I did make a great effort as a member of the Rajya Sabha Select Committee on the GST to push for a portion of GST revenues to be earmarked for the local bodies. But there were no takers. And so the only place where it exists is in the dissenting note of the Congress party to the report of the Rajya Sabha Select Committee on GST. And adverting to a question that was put to you, we had also very strongly recommended that alcohol, petroleum products should be brought within the ambit of the GST. Unfortunately, that was not done, and that is why petrol prices are now ruling at about between 100 and 110 rupees per litre. Alcohol smuggling and illegal consumption is on the rise. But nevertheless, I think with respect to local government, the only point that I would say you glistened over was the importance of social audit through the Gram Sabhas. That would, I think, be a key element of ensuring that this does not remain a bureaucratic exercise, but becomes a people's exercise. For utilization certificates can be issued irrespective of whether the job has been done or not. And it is impossible for someone sitting in Delhi to check on what is happening in 600,000 villages of the country. And so there is a tendency to make this an accounting exercise instead of an exercise in social responsibility. But I would also mention, although that's perhaps been overcome by these digital developments, that the Institute of Public Accountants, which is the counterpart to this particular Institute of Chartered Accountants of India, had offered under V.K. Shunglu, who was our classmate in St. Stephen's College and subsequently became the chairman of he became the CAG and then the chairman of the Institute of Public Accountants, that while there are some accountants who are very rich indeed, there's a very large body of chartered accountants who are looking for work and really desperate to find it. And he said it would be very easy for them to assign one chartered accountant per 10 villages or 10 panchayats to look into their accounts every 10 days in rotation, and that this would professionalize the presentation of accounts and also make it possible for the auditing process to be more meaningful than it is today. There's one other point which is a bee in my bonnet that I want to make on this occasion, which is that a large number of the grants that are given by the central government for various activities of a very noble nature, like for instance education, actually get put into the hands of NGOs who are assisting the process. But the deputy CAG told my committee back in 2012 that once the money goes into the hands of NGOs, they cannot follow the trail any further. So a very large amount of our social expenditure, or social sector expenditure, which is being undertaken by the NGOs, are simply outside the ambit of audit, either by the state audit or by the central audit. And this is an issue that I think in future we'll have to look to. But I would imagine that all future finance commissions from the center, with respect to the third tier of governance, are going to be measured against the performance of Nand Kishore Singh. I think he set a new benchmark, and that is what makes us very privileged today to have heard, probably for the first time, from none less than the chairman of the 15th Finance Commission as to what he has proposed and has now been accepted by the union government as the requirements to meet the sound finances. This is an expression which we put into the constitution deliberately, the sound finances of the local panchayats. And I think by drawing attention to this, he would have succeeded in at least focusing attention, if not securing solutions, to the problems that he has outlined. Also, I would like to see NGOs in India take up this question of the violation of constitutional provisions, and more importantly, the violation of state legislation in respect of Panchayati Raj in the high courts of the states and in the Central Supreme Court. Because the central government cannot sue the states without causing tremendous ruptures in the unity of India. And if the state governments will not be doing it vis-a-vis the union government, because it's they who are at fault. So the only answer to getting operatability or operationality of the legal provisions and the constitutional provisions is for the citizenry of India to go to the courts and present before them the reality state by state. And perhaps from next year onwards, I would like to, if I can find an adequate number of people to support me, I would like to undertake this exercise as someone who has seen the very noble thoughts that went into the Constitution, and more importantly, which were entirely endorsed by the state legislatures and added to by the state legislatures, actually followed on the ground. And that is not happening. I'm not sure that I agree with you about politicization. If colleges in India can't have student body elections, except at St. Stephen's College, without the interference of political parties, I think it is a pipe dream to imagine that the panchayats can be rendered immune from the winds of politics in a living and live democracy. But otherwise, I would hope, and this is my request to Mr. Jalapati and to Mr. Paramashivan, that they secure a copy of your lecture and see to it that every single person who was registered to participate in this program receives a copy of this lecture. And I, for my part, am hoping to persuade NK to let me have a copy of this lecture. As far as I know, it's not a government document marked top secret. And therefore, I would like to have a copy of this lecture and share it with the Panchayati Raj community, at least the active participants whom I'm familiar with. Thank you very much. And I should, because this is a lecture in memory of my father, I should, as I usually do, add a few words about him. Appa, as I called him, was born in a village in Tanjore district in a landed family there. But he was the third son and knew that he would either be cut out of his father's will or receive only a small share of what the elder two brothers were going to get. And so he decided to educate himself and became the first member of my family to actually graduate. And his graduation was from Pachapas College in Madras, as it was called at the time. And he was a classmate of C.N. Annadure, whom we all call with great respect Anna in Tamil Nadu. But precisely because of that, there was such a strong movement against the Brahmins in Tamil Nadu, or Madras Presidency as it was at the time, that my father felt, perhaps wrongly, that there was no future for him in his home state, but that he should get away from it as far as he could. And he found himself Aiyar, PNS Aiyar, in Lahore, who 9 years earlier had seen the light and shifted as far away from Madras Presidency as it was possible to go in those times. And so Appa went up in 1927 at the age of 20 and remained in Lahore till 1947, when he was compelled to come to India as a refugee. So we are a peculiar family, a Tamil Brahmin family who are refugees from Pakistan. And yet my father and my mother brought us up on very secular values and refused to allow religion to become a source of prejudice. My father was allegedly, because I hardly knew him, I was only 12 when he was killed. It was said that he knew the law so well that when an income tax appellate officer challenged him on the interpretation of a particular clause of the Income Tax Act, my father recited the text of the act back to him backwards and said, now you begin to understand what this sentence says. So that is the kind of reputation that he had. When I was posted to Karachi many, many years later, in 1978, that was about 25 years after he passed away, there was a local businessman with his origins in Tamil Nadu who said to me that it was only my father who could have helped him save himself from the Pakistan tax authorities in order to take up the special offer of Indian citizenship that had been made to him. But when he read in the papers that the man had been killed in an air accident, he then decided that he had no option in life but to remain a Pakistan citizen. And he grew to become one of the richest businessmen in Pakistan. So my father has contributed in life to India and in death to Pakistan's prosperity. This is the irony in which we live. So thank you all very much, and particularly C.A.K. Jalapati and his colleagues for having honored my father's memory for the 14th time. And we will continue this exercise indefinitely into the future. Thank you, NK, for having set such high standards that I am afraid if your successor speakers come to hear of it, they may balk at the prospect of becoming your successor. Your predecessors must be feeling extremely jealous on this occasion. Thank you. Jai Hind.
Thank you very much, sir, for your exceptional and invigorating address. We are nearing the conclusion of yet another prestigious memorial lecture held in the memory and the recognition of the services rendered to the profession by late CA V. Sankar Aiyar. It has been a wonderful evening, and it was also made an enlightening evening with the learned speakers sharing their wisdom. SIRC is greatly privileged to have the presence of dignitaries and large number of participants. To express our heartiest thanks on behalf of SIRC of ICAI, I request Dr. T. Paramashivan, the regional head of ICAI Chennai, to propose vote of thanks. To you, sir.
Thank you, Uma Madam, for giving me a wonderful opportunity to propose a formal vote of thanks for this really wonderful, enlightening memorial lecture. I should start with Yamini Aiyar, who has given an overview of the impact of her grandfather in her academic and the personal life, and she has taken a walk through that Ganesh Mandir. I thought that we are visually seeing that Ganesh Mandir of Delhi in memory of her grandfather. And yes, our chief guest has mentioned today, her grandfather must be proud about her role in the economic development and economic research, and the thought process which she is bringing to these memorial lectures. Thank you so much, Yamini Aiyar Madam, for your wonderful introductory speech and the way in which you have introduced the chief guest. You have spoken your heart. It is not a repetition of the biodata which Sir has given through his personal secretary. You have spoken your heart about NK Singh sir. Thank you so much. And more importantly, you have set the tone for this topic of this today, resetting the central state finances, rethinking the third tier. Because I should say many of our audience are familiar with these income tax topics, corporate law topics, and the GST, indirect taxes, and financial management, and accounting and reporting. This setting the tone, what is the importance of this topic and what is the relevance of this macroeconomic management is really wonderful, Madam, for your valuable opening remarks. And coming to our chief guest, our NK Singh sir's that lecture, because I don't have vocabulary in my the words in my vocabulary. I repeat, I don't have any words in my vocabulary to express our gratitude both at the SIRC level as well as at the person level. How we could thank a legendary speaker at the level of a chairman of 15th Finance Commission, who has brought a new thought process, entirely different importance of this Panchayat Raj and the third tier of our economic development. Mahatma Gandhi once said, the life of India lies in villages. So how the villages can be transformed, how the accounting, all those issues, the challenges which he is facing, and how he has managed this 15th Finance Commission for the development of this third tier. Really, we have been very fortunate to hear from you, sir. Yes, our Sankar Aiyar sir has mentioned. Hearing from the chairman of this Finance Commission is a great privilege for this topic, sir. And certain dignitaries, sir, I should admit, sir, as an officer, certain dignitaries who are addressing our CA profession in our platforms adds value to the individual chartered accountants. But legends like you have added by this lecture, guest lecture, you have added a great value for the CA profession, sir, as well as the institute, sir. Whenever you have mentioned Yamini Aiyar should note this thing, Yamini Aiyar has contributed like that to these economic issues. I have also been noting what are the role of chartered accountants in the topic and the improving the transparency, sir. Because we are also submitting our services, sir, the CA profession's services, that we are ready, we are offering our services for improving the transparency of urban and local bodies by way of converting their accounts into double entry bookkeeping, sir. Yes, our friend, philosopher and guide of this profession, Sankar Aiyar sir, has mentioned your lecture, we will get the hard copy, that is soft copy of your lecture, and we will pinpoint what are the role of our chartered accountants in this third tier of our economic prosperity, sir, and we will ensure a follow-up measure for this memorial lecture. I should say, sir, you have set the tone. For the CA profession also for the next 10 years or 15 years, how they can play the role for the economic development of the Panchayat Raj and the villages and the local bodies, sir. And the third, we are very much grateful on behalf of SIRC and the CA profession, sir. And our proposing vote of thanks, sir, for our Sankar Aiyar, sir. What I can say, sir, because he has been instrumental. He has been instrumental for 14 memorial lectures in memory of his legendary father, Sankar Aiyar, sir. And whoever, every time I used to request him, sir, whoever I want to listen, who are all the role models for the macroeconomic management, he has been brought, sir. You are one amongst them, sir. Yes, our sir has mentioned you have set new benchmarks. You have set new benchmarks for this memorial lecture, sir. Thank you so much, Aiyar, sir, for your valuable address, and you have advocated the social audit and this social responsibility as an important thing for our own CA profession, making an agenda for 10 villages should be audited, or accounting has to be taken responsibility by your CA profession, sir. We have noted down your suggestions, sir. We will take it forward through an appropriate means, sir. And we are very much thankful for the audience who have listened to the lecture very carefully and made the pertinent questions in the macroeconomic management and the role of Finance Commission, sir. And thank you very much for each and every one of you for contributing for the success of this memorial lecture. And I should place on record my sincere gratitude to CA Venkatram of our Mumbai office of your firm, who has been coordinating on a regular basis, and the personal secretary to our Sankar Aiyar, sir. His name also is Venkatraman. He is also regularly, today morning also he has got that soft copy of the lecture and distributed to around 400 participants. These things, sir. We are honored, sir. Thank you so much for each and every one of you for making this memorial lecture a grand success and memorable event in the annals of SIRC of ICAI. Thank you so much.
Thank you, Dr. Paramasivanji. SIRC of ICAI records its warm thanks to all the distinguished personalities and the allied professional fraternity for making the occasion a lively and enriching day. Thank you all. Please raise from their respective seats for the national anthem, please.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you. Good day. Thank you very much. Good day. Thank you very much. Thank you.